I think I wanted to reveal the myths about Islamic finance and Islamic banking because there are a lot of myths. I've had a lot of criticism from incumbents within the industry. And I know there's a lot of whispering behind your back that says, this guy is a radical, he's crazy. So I went to one scholar, for example, and said, hey, look what's happening in Palestine right now. We can actually create financial power for real people on the ground, for the public, which is real economy based and risk sharing, and create a healthy economy for everyone. Proposed some ways. He said, look, brother, first we must get the banks there, the Islamic banks. You're still thinking like an establishment person.
There's an argument around don't throw the baby out with the bathwater. Are you limiting some benefit? Well, welcome to another episode of Wholesum Money with Tanvir. To start off with for our audience, why don't you just introduce yourself, Harris?
My name is Harris Irfan. I'm the CEO and co-founder of Cordoba Capital Markets, or CCM. I'm a former investment banker. I used to be with Deutsche Bank in their Barclays Capital. I co-founded the Islamic finance team at Deutsche in the early 2000s, and I was CEO of their Islamic subsidiary. And then I was global head of Islamic finance at Barclays. I came back to the UK from the Middle East in 2012 and worked for a boutique Islamic bank. And then about 7-8 years ago, set up on my own and co-founded CCM about 2 years ago.
So you've had a very distinguished career in Islamic banking and finance across the Middle East, UK, and to kind of go before, when you were sort of graduating from university or thinking about where you want to go, what drew you into Islamic banking and finance? And then I understand you left. So what made you leave kind of these very prestigious positions?
Yeah, well, I think it's sort of qadar Allah, the divine destiny that determines these things rather than a specific plan that one does oneself. Mm-hmm. And I would say that I left university with a degree in physics, thinking that, I didn't know anything about business or finance or economics, and I thought that I would be an astrophysicist. Uh-huh. And I thought I'd be observing stars from a laboratory in Palo Alto or somewhere, and actually realized that my skill set was not good enough to be that person.
Instead, you might peer into sort of astronomic profits or growth.
That would be nice. Yeah. I realized that when I left university, then I could put my skills to use, quantitative skills to use in the city of London. As a financier. I started as a management consultant and moved after a couple of years to do project finance. Project finance is the financing of infrastructure, roads, railways, and so on. But I was always very uncomfortable with the idea that I was dealing in a debt-based industry.
Because project finance, essentially, you're leveraging it.
Yeah, you're lending to construct, roads and railways and hospitals and schools, which in and of itself seems a noble endeavor. Mm-hmm. But the financing method that you're using is based on riba or interest. Mm-hmm. And at the time, I was very uncomfortable making that move. And I spoke to somebody in the Islamic finance industry and I said, look, I have this opportunity to work in project finance and I'm really kind of uncomfortable. I know that there's a lot of good skills I can learn there. And what he said to me is, this is not necessarily the advice that I give to young people. I think it depends on the circumstances. Yeah. But the advice he gave to me was, look, if you don't do this thing and you go work for a blue chip financial institution, then you will never learn those skills to progress beyond them, create something new and radically different.
Yes.
So he recommended that I go and do it. Now, you have to be careful giving that advice because not everybody keeps their eyes on the prize.
Yes.
Not everybody says, I'm doing this with an end in sight.
Yes.
My goal is something else, not to make money out of this particular endeavor. So I think it's there's a danger that advice gets misconstrued. And that's what I did. I ended up becoming a project financier. Project finance is very interesting because it's an area of investment banking that combines a lot of different skill sets, financial modeling, contract law, engineering even, right? This is a very wide and deep part of investment banking. So great training for me.
I remember my first week or the second week at the Islamic Development Bank, and my manager came to me with what he said, this is the project finance Bible. And I remember working on the documents, the process. It was very full on. We had to become experts in insurance, EPC, engineering, legal, as well as Sharia and other aspects, even insurance. So they were very fascinating, but very intellectually stimulating. So you had we worked on some very projects. I understand you worked on the Zamzam Towers in Mecca.
Well, that's much later, in fact. So I got asked by Deutsche Bank to move to the Middle East to open a new office in Dubai in 2001. And Dubai was starting to take off the local real estate market, the local stock market. They had just decided to open up a new financial zone called the Dubai International Financial Center, or DIFC, which was modeled essentially on the City of London, the square mile. And we were the first investment bank there. And I was the first investment banker of the first investment bank in Dubai, in the DIFC. So Deutsche Bank became the corporate finance advisor to the Dubai government on that. And so I was just very fortunate to be there at the right time. And a lot of clients came to us and said, well, it's lovely that you're here at Deutsche Bank, but can you do these deals on a Sharia-compliant basis? Now, my background was in conventional investment.
You hadn't done Sharia deals at that point.
I mean, there was no Western investment, no bulge bracket firm like a Deutsche Bank that was doing this business. Yes, HSBC was doing retail Islamic finance. Yes, Citibank had done some, but this hadn't been done on a huge scale yet. And suddenly you've got these young guys from Deutsche Bank over here in Dubai, and they're being asked to do Sharia-compliant financing. So we hired the man who was known as the grandfather of the modern Islamic finance industry, Sheikh Hussein Hamid Hassan. And he was the most incredibly impressive scholar, theologian, and theologians Sharia boards are there to vet and check the compliance of financial transactions with Sharia law, specifically with the jurisprudence of commercial transactions, which is fiqh al-muamalat. And they're experts in that, but they're also experts in modern financial instruments.
Yes, of course.
In economics, in comparative law. I mean, they're really polymaths. Very, very impressive people. And so we learned from Sheikh Hussein. And effectively, like his disciples, we learned at his feet. And we learned how to do these deals from first principles. So never before had a Western investment bank come along and done large-scale, non-vanilla sukuk or Islamic bond transactions. Never before had an investment bank done hedging products, treasury management products, structured investment products. This was all brand new, and we invented it. The Deutsche Bank team was the team that invented all of these products over 20 years ago. And even today, when you look at a sukuk transaction in capital markets, Islamic bonds, if you read that documentation, effectively there's a sort of watermark or signature in there, which is our work. So you can tell that this is a Deutsche Bank document. You can tell that even today. So we got invited as the first Western investment bank into Mecca to help finance the towers around Abraham Beit, which is where the clock tower is. And there's 7 towers around it. So we financed one of the towers, which was the Sapa Tower. And this was done on a sukuk basis and fund. Now, I've spoken about this at length before, and there are elements of that I think are regrettable. Part of which is that the financial transaction was part of an overall project that completely changed the face of Makkah itself. And there is, as you well know, there's a lot of public criticism. Those towers dominate the skyline and dominate the Kaaba itself. So if we hadn't done it, somebody else would have done it anyway. The construction was already underway. The permissions had already been granted. The contracts had already been awarded. The financial bit was the last bit to go in place. And in a sense, it was a learning experience. We did something that hadn't been done before.
I mean, it goes to, beyond the structuring, getting the Sharia aspects right, there's a broader question of the what's the purpose behind this? What is it going to achieve? What's perhaps social ramifications? Which we'll cover a little bit more into. But I want to hold your fire a little bit on the critique of some of these transactions. I want to talk a little bit about your book, and you kind of I think and I've cut you short from going to that part of the story, so I want to bring it into this question, which is what kind of made you, I guess, leave Islamic banking and finance sort of in that grandiose sort of positions and investment banking, these massive project finances, because the sector's ballooned further. It's now multi-trillion-dollar. And around that time, or soon after, you wrote this book, Heaven's Banker and you said it's a hidden world. So I want you to tie those two things together. So what made you leave perhaps in a bit of critical disdain, and why do you call it the hidden world?
It's hidden because there is a general perception about Islamic finance from the lay public. A lot of it is very negative, and I'm sympathetic to that. I understand why people, Muslims specifically, are critical of Islamic finance, because what they see is, on surface, a reverse engineering of conventional debt products. And they say, well, you added some Arabic words, but how is it really any different? And I agree. It is actually, in some senses, not truly getting back to first principles of Islamic economics, what I call prophetic economics, prophetic finance. And one of the things I want to do in my book was to reveal, how does the industry actually work behind the curtain? How do we do deals? How do we structure those deals? What's the purpose of the scholars? Who are all the parties involved? Who are the stakeholders? Why does the Islamic finance industry end up looking like it does, which is dominated by debt and financialization and banking? And banking is, by its nature, it's called fractional reserve banking. In other words, whenever a bank takes in deposits from customers, which become reserves within the bank, it's allowed to lend many, many multiples of those reserves, hence called fractional reserve banking. How is that possible? And how can you make that Islamic? How can you overlay halal contracts on top of that are vetted for compliance against some very specific rules of jurisprudence, and yet overall still be compliant, because you're creating money from nothing? Because the definition of riba, of interest, or usually, is actually excess or surplus. So if you're creating money, if I put a dollar into a bank and the bank's able to lend $10, $9 were created from nothing. Right? And it didn't exist before. That's money creation. If that's not riba, I don't know what is. Surely that falls within the definition. So halalizing it, by overlaying these contracts on top, doesn't really solve the fundamentals.
So a debate between the form and substance. That's the I mean, it's really interesting. I was talking to a friend today, just over coffee, and I was trying to understand, and I always ask this in every market, I try to understand how people banking, what are they doing, what issues they use. And he was saying something that was really interesting. He said, I couldn't figure out, so he had some money in an Islamic bank here in the UK. He said, I couldn't figure out why the profit sharing rates were moving with the interest rate of the central bank. And I hear this common criticism in lending products as well, as why my home financing, which is so-called riba-free, so linked to the ribawi system. And so you're right. So there is this confusion. There is this sort of skepticism that is in the industry. And you were trying to peel back behind it. So was that kind of the main reason you became a bit critical and you wanted to not further your career in that and try something else? What was your genesis?
I think I wanted to reveal the myths about Islamic finance and Islamic banking, because there are a lot of myths, and people are very critical about understanding real details and nuts and bolts and how it works. And I think that's important before you criticize something.
Yes.
Right. But secondly, I also wanted to consider, do we have any alternatives? And at the time, and we're talking just over 10 years ago, I wrote the book. At the time, I wasn't really clear on what the alternatives should be. I thought that I would continue to champion the Islamic finance industry in its then current form, which is dominated by banks. I thought we could still do that, but I have since concluded that's simply not possible.
Oh, wow.
So that's why I'm going in the direction that I'm going.
Did you face much backlash from your book and afterwards?
Oh, yeah, I lost a lot of friends. Yeah, I mean, I've had a lot of criticism from incumbents within the industry. And I know there's a lot of whispering behind your back that says, this guy is a radical, he's crazy, he doesn't know. We're part of an establishment. We are doing something that's good for people. Islamic banking is good. I've even done this with scholars, by the way, very well-respected scholars. I went to one scholar, for example, and said, hey, look what's happening in Palestine right now. We can actually create financial plan for real people on the ground, for the public, which is real economy-based and risk-sharing, and it will create a healthy economy for everyone. And there are ways that we can do this. And I proposed some ways. He said, look, brother, first we must get the banks there, the Islamic banks. Let's set up the Islamic banks, brother. This is how we do things. And I'm thinking, you're still thinking like an establishment person.
It reminds me of one of my mentors, Rafi Hanif, former CEO of CIMB Islamic. And he said to me, Tanvir, the mistake our generation made is we started with Islamic banks.
Yeah.
He said, it sucked us into a vortex that we just cannot get out of. Yeah. We needed to have started from first principles. So he's a big believer of that. They're powerful arguments. But to take the view of those who criticized you, or perhaps who are no longer your friends, there's an argument around don't throw the baby out with the bathwater. Essentially, to use a sort of, metaphorically, that isn't there a lot of good that it's doing? And by you trying to throw it all out or criticize the core of it, are you limiting some benefit?
So there is some benefit in it, but most of it is socially useless. And it's a little bit like the argument of alcohol. Even in our faith, we recognize that alcohol has some small benefits to it, but the disbenefits massively outweigh those, and that's why it's banned.
It's interesting you mentioned that, because I was very tempted on the flight over this morning, my red eye from New York, and I was very hungry for breakfast. They brought a vegetarian bagel. Okay. I was saying, great, vegetarian. For some reason, I thought, let me just have a look at the ingredients. And there you have it, Dijon mustard. So as soon as I landed, I thought, let me hold off, let me check, because I wasn't sure. And sure enough, Harris Irfan had written about Dijon mustard and the white wine lessons there. Of course, there are some different opinions, but you're right. Like it's to look very carefully, just as I had to do with my food, but understanding, okay, when you peel the layers away, what is actually there? Yeah. So fast forward, the genesis of Cordoba Capital Markets. I mean, you explained the rationale why you wanted to leave, but why Cordoba Capital Markets? First of all, maybe give us a little bit of brief for what it does, and talk us through how this became your path.
Okay. So I had an old friend in the industry, a guy called Tariq Al-Diwani, who read The Problem with Interest. He had an excellent book, and I recommend to everybody. And Tariq introduced me to the CFO of an international Hebrew business. And I said, so here's a guy who, is a CFO, and they want to expand. They're a very good company. They need growth capital. And I spoke with the CFO, and he said, look, we are a medium-sized business. We're very, very good. We're inundated with financing offers from banks, but we don't want to put that bank debt on our balance sheet because it weighs us down. It's a burden. It creates security and collateral and covenants, and it restricts us in many ways. And on the other hand, if we raise equity, we dilute the shareholding of a very close group, because this is a business that's majority owned by one individual. These are owner-managed businesses, and they typically don't want to dilute their equity. Why should they? To get growth capital. So is there a third way? And I worked with the CFO, and we created this PPN, Profit Participating Note. We went back to first principles of prophetic economics. Because if you look at those first principles, what was the Prophet Muhammad sallallahu? He was a mudarib, a manager of people's capital.
So all the caravans traveling up to Sham.
So the caravans leave the city walls. He's managing that capital. He's buying and selling goods, trading real economy goods, spices and textiles and whatever, bringing them back to the city walls, trading them in the marketplace, and sharing the profits with his investors, the Rabb al-Mal, the owner of the Lord of the Wealth.
The funds are catalyzing an economic activity.
Correct. And they're partnership-based. In the modern world today, banks, whether they're conventional, whether they're Islamic, they have a master-servant relationship.
Yes.
Borrower-lender is a master-servant relationship. It's not a partnership.
I remember listening to a banker from a Saudi bank at a workshop last year, and he said to me, we're lazy. We just want to see, can they take enough security? Can we get enough security over the business? Is there enough capacity to absorb the debt servicing? And that's it.
Yeah. So what does that mean? That means they don't want to do due diligence on the underlying real economic activity. It's just, here's 100, you give me 110 back. I don't care what happens in between. I'll take the shirt off your back if you don't pay me.
Exactly.
Now, that's not a partnership relation, and that's not healthy.
That's not healthy. I mean, your analogy of master and so servant is apt for that.
So the instrument that we created, we want it to be bond-like in format. In other words, it looks like a debt instrument that's listed on an international stock exchange and is regulated, and investors buy into this vehicle. And they're familiar with the concept and the format. They can see regular, not coupons, but distributions being paid to them. Now, take that format, but then take the first principles of prophetic economics and say, how do we create a modern capital market sophisticated instrument listed on an international exchange that is based on partnership, between investors and investee companies. The companies want to raise capital to finance a specific trade activity, and the investors want to take a risk share in that specific activity. Now, you could argue, well, that sounds like equity, that sounds like shares. And it does a little bit, but the difference is as follows. We're not financing all the activities of the business. We're not taking a business and saying we'll participate in all of your overhead.
Is that a bit like your project finance days where
It's more like trade finance.
putting a very specific purpose and a time frame?
Exactly. Limited recourse. So there's a very specific activity taking place. So a company could be across many different business lines. And we take one business line or one trade or one set of inventory or one set of assets. And we say, we'll finance that. And we'll do an ultimate level of due diligence on that one asset.
And absolutely. And this sort of development, it's happening in the broader economy as well. So, I mean, I'm familiar a little bit with the venture capital space. And now there's revenue-based financing models. There are profit-sharing financing models. And a lot of startups think, actually, I don't need to dilute my equity and have these very aggressive shareholders who want certain types of outcomes.
Yeah, that's right.
I can, take on some other types of financing. It's one of our deals that we've done in Australia. It was a cybersecurity company, venture capital funds that approached them. And they said, actually, we just need a bit of growth capital.
Yeah.
So we're seeing this sort of change happening, but you're onto it way before many other Islamic financial institutions were.
Well, they still aren't.
Yeah.
The Islamic banks are not into this.
No.
I mean, there is a standard within the industry called AOFI Standard 63.
Yeah.
And AOFI is the standard-setting body in the Islamic finance industry. So all the Islamic banks have to adhere to their standards, in theory at least.
Yes.
And they have started a consultation process on a new standard called Number 62.
Yeah.
And Number 62 essentially says, when you are doing a sukuk transaction or Islamic bond, from now on, we want the sukuk to actually encompass the assets or the real activity that is taking place and not to be removed from it so it looks like a bond,
Right.
where they guaranteed repurchase.
Right.
Well, actually, from now on, we want that sukuk to reflect the underlying economics of that particular activity or asset.
Gotcha.
Nobody does this.
Yes.
Except
Which is
for us.
essentially what your PPN is.
Exactly.
What I've mentioned
Yes,
behind it.
that's right.
I mean, that's going to be a very fascinating development. I can imagine a lot of mumblings there in the broader Islamic bond
Oh, they're
market.
pushing back. Oh, they want to do it. Yeah, because you know what? It means they have to work for it. Now the bankers and lawyers don't have guaranteed bonuses anymore. They actually have to do some due diligence.
Absolutely.
Yeah.
So we touched a little bit about the risks and how bankers, they want to cover their risk. They want a guaranteed or near guaranteed return basis, which is why they take the security, they put the covenants, all the restrictions. How does a PPN manage risks? Because at the end of the day, it's great. We can have a story around sharing risks and doing something that is not anywhere near interest bearing or interest like. But investors want to manage the downside. So what are the downside risks in PPN, if we can explain that? And how do you mitigate or manage these risks?
Yeah. It's very important that investors know that they are taking market and performance risk. And they're not guaranteed to get their money back. And that's a really important starting point.
So just to be clear, so you're saying there's potential capital loss.
Attention.
That's the invested capital, but also there's no guarantee on the profit margins either.
Exactly right. Now, how do we then entice investors to come actually invest with us?
Absolutely.
Right? The reason is we sit with our client companies for several months beforehand, embedded within their operations. Bankers do not do this. So we actually have essentially a sort of a partial CFO-like activity. We observe and monitor and work and restructure their businesses over several months before we are certain that they are ready to issue a PPN and raise capital. And the process that we go through during those several months is to ensure they have internal governance in place and the specific activity that we're looking to finance, their growth capital. We want to see exactly what happens when every penny and every cent goes into that business. We want to see the chain of where that penny ends up and how the commodities are or goods and services are produced and how the profits are split. We want to watch it through the whole chain. So we are part of that structuring, restructuring, and monitoring process. So that's the first thing that's different. The second thing is we introduce things like capital controls. So for example, we have a client who's an international agribusiness, and we make sure that the particular product that we are financing using a PPM we see sales contracts locked in before we deploy capital, before we allow their bank account to release money to buy the raw materials.
Gotcha.
We already want to see
So there's some sort of certainty or assuredness that the product will sell at a certain price and someone will buy it.
It's not a guarantee,
Yeah.
but it is a process that we make sure that there are controls in place so we can be reasonably certain there will be some profit to be made, right? And that's a good thing. That's actually a healthy way to run a business and to release capital.
And it's I mean, they can't use it for any other purpose. It's a very clear kind of step.
It's very carefully ring-fenced in a segregated, orphanized vehicle with independent directors, so it can only be used for one purpose.
Gotcha. So if we look at, I mean, you mentioned the agribusiness model, and now I understand you are developing a number of additional deals where the PPN is applied. So can you just walk through the mechanics? How do you, if a new business comes to you, and they want to do a PPN with you, walk us through the process. How do you kind of take it from that start to the final execution?
Yeah. So first, there's a very simple set of financial filters. Is it a suitable business for financing? First of all, we're not a last resort for anybody. We want to be the financing choice of businesses who have lots of choice. So they are inundated with offers from banks to finance them. They want people investing in their shares. These are for high quality businesses that will be future stars. Secondly, we're not looking for businesses that are somewhat speculative in nature. So early stage will not work for us. We're not a VC.
Yeah.
We're looking for mature, stable businesses that have a long track record of doing safe, dependable, utility-like business, right? International agribusinesses, healthcare, recycling, renewables. These are all good businesses for us with a track record.
Yeah.
These are medium-sized businesses, and the reason for that is because we don't have the resources to deal with lots and lots of small businesses.
Yeah.
So typically the turnover will be between $10 and $200 million per annum.
Gotcha.
And we're looking for very solvent assets, right? So if anything goes wrong, because we don't have a guarantee in place to repay investors' capital, we want to make sure we can liquidate the assets so that we can get something back for our investors. That's really important. Is there something real there?
How is that not different from how banks take security or a business?
Because it doesn't actually matter what the performance is. The bankers are not doing due diligence on the underlying activity. So it's not a very healthy relationship. They're saying, here's 100, you give me 110 back. If it goes wrong, I'll just repossess your assets, right? That's not a very healthy relationship. In our case, you can only take possession or liquidate those assets when certain things go wrong. For example, if the performance has been bad, that's an investor problem, right? So you are taking a healthy participation in the economy.
Yeah.
That's really important for a healthy economy, that investors and investees have a partnership.
Yeah.
So they're both aware of the risks before they go in and they can due diligence on each other. They are taking a market risk. The question is, what if someone is a bad actor? What if they've done fraud or negligence or the rest of their business became insolvent? That was a trade is still a good one, but the rest of the business was insolvent, which causes cross defaults and so on. What if they breached their contract with investors? These are all reasons why you can liquidate the assets and repossess and bring their capital back to investors.
Gotcha.
But it's not for market or performance.
Not for market. Yeah. Okay, that's a key distinction, which is obviously from the business perspective, that's also the risk they want to share with people.
Correct.
Like they could be like, we're going to have controls in place. We're not going to avoid fraud. We're going to have proper governance as you've gone through.
And the advantage, of course, is then you can offer them upside.
Yeah.
So they're not earning 4 or 5% on a scoop. They're earning 10, 12, 16% in some cases, right?
Got you. Which is almost equity-like return.
Almost,
you might expect from growth assets, like if you're in the stock market. So, you know, you mentioned the screening and you mentioned the kind of sectors that you like. What are you worried about? You know, obviously you're saying that the performance risk is something the investor can share. So when you're coming to market, bringing these deals, are you doing some market sounding and understanding the macroeconomic conditions? Are you figuring out, okay, certain sectors are probably not good to go into? Or do you have some hard rules that you always follow? Can you talk us through that?
I mean, there's not necessarily hard and fast rules. We're not completely inflexible, or we do tend to follow some basics, some of which I've already explained, such as mature and stable businesses, for example.
So, and more in sort of the sectoral sort of consideration.
Yeah, I mean, look, people are talking about sort of AI and blockchain and Web 3.0. I'm going to say, do you actually know what those words mean? Because I don't. And I'm not sure I know anybody else who does, right? So I see a lot of money pouring into these sectors, especially from VC firms.
Yeah.
But that's not our business.
Right.
We need to understand very carefully what it is that we're
Where the value's being created, customers, how's revenue generated?
everything from tariffs to customs to cross-border to geopolitical risks. We need to know everything about that business to the smallest detail.
Got you. Okay. So wide sector of the economy is okay, but obviously you apply those lenses through and the criteria. Now, I wanted to talk a little bit about, and we touched upon a little bit about this, which is the broader societal impact when we talk about Islamic banking finance. Does, beyond just the commercials, do you care about what these businesses are doing? Are there social or environmental impacts that you're also interested in? Can you talk through the logic of that?
Yeah, one of the reasons why I left the banking industry and Islamic banking is because much of what takes place in banking is in fact sexually useless. And there's not even my words in the words of a former regulator as a head of the SCA, or I'd say as it was back then, Lord Adair Turner. And he described most of it as sexually useless. And I sincerely believe that a lot of what banks do is shuffling paper around rather than creating real value in the economy. Look at what private equity firms and VC firms do, right? They are financial engineers. A lot of what they do is rip up the balance sheet of a company and extract value, so-called value.
Well, the standard model is the leveraged buyout.
Yeah, which is a nonsense model, right? It's a nonsense model that has been fueled by fiat money and cheap debt since the 70s. And it's one that I think there are a couple of solutions to move away from. One of them is the kind of thing that we do, which is PPNs. Another is a much more radical solution, which is finding a form of sound money, which is not fiat-based. It's not by decree. It's not,
can't just inflate it. It's not going to just move.
It's inflated because the money supply is inflated by, for example, they use euphemistic words like quantitative easing. That's just money printing, right? This flooding the supply of money into the economy.
Which then fueled the inflation bombs that we all experienced.
Right?
And still are living through today.
Exactly.
Yeah.
So actually, these are radical solutions. And I think that what we try to do is to we go back to first principles. How do we create value in the economy? It's not through financial engineering. It's not through huge leverage buyouts.
I mean, one thing that, sorry, as an aside, you mentioned the word financial engineering. I've had a look at the deal that you mentioned, the agribusiness. The contract is ridiculously simple.
Yeah.
Yeah. Couple of pages at most.
Yeah.
With a bit of padding.
Yeah. Yeah. Correct. The essence of it is very simple. It's actually amazing because we based it on the concept of a mudaraba, which is an investment management arrangement in traditional Islamic finance.
You specify the purpose, you have the profit share arrangement calculations.
So around this, you've got this whole legal documentation and infrastructure, but all sort of capital markets, contractual arrangements and so on, which, it's a big file this thick. Yeah. But essentially, you're right. There's basically a couple of pages in there, which are the essence of the risk-sharing real economy financing, the mudaraba itself.
Yeah.
And when I started this process a couple of years ago, I looked around for an off-the-shelf mudaraba. What are the banks doing on this? I literally couldn't find a single example of this in the banking space. Banks are not...
I asked Milo when we were doing documents for our fund, and he said, I've got an ijara, I've got a murabaha. I don't think I have a mudaraba the way that you want it.
Why not? Because it's too much effort to do real due diligence. It's not debt-like enough. It doesn't represent their culture of financialization, which is the proliferation of debt and debt-like services in the economy. And I would like Islamic finance to move away from that, to become purer, to follow AOFI Standard 62, which is real economy and risk sharing. And that's what the PPN does.
So, you're being radical in many ways. I mean, you hold some radical views, someone may say, and your model is very radical in terms of complete departure from how typical Islamic banking and debt instruments are done. It can't have been easy. What was hard in the execution of this model, and how have your stakeholders responded, or have you had to kind of face a bit of uphill battle?
Well, first of all, just in terms of structuring it, the legal work and the compliance work that goes into this is up the scale. And I know that if anyone else tried to do that, either they will get it badly wrong, or they will pay an enormous amount. The legal fees alone would be over $1 million just to create documentation.
And it's notorious Especially if you're doing anything Islamic finance, you pay always double the fee.
Yeah, yeah. And you would only be able to get it done by a handful of lawyers in the world. And I sincerely believe that. I know that because that's my background.
Yes.
I've been doing this for 30 years. And there are a lot of lawyers out there who claim to be specialists in Islamic finance. But if I put this to them, and I did, by the way, I tendered this out to law firms. In the end, I did the documentation myself. And I used a Jersey law firm and an English law firm to vet them for compliance with local laws and local regulations. So the structuring work that we did was a 2-year process, and that was very difficult. And even the compliance today is something that's it's something that is a potential not break on the business, but it potentially holds us back. You need to find slick ways to bring investors and companies on board at a faster rate to scale up. So that's one issue. The other issue is that we've got, when I go to investors, if I go to a banker and I explain what a PPN is, his mind melts. Right? His brain can't cope with it. It's like, it's okay, it's a bond, but it's not a bond. I don't get it. Why is this not a bond? Okay, it's a sukuk, but it's not a sukuk. I don't get it. Why is this not like a normal sukuk, which has a purchase undertaking attached to it?
Yeah.
A purchase undertaking is a guaranteed buyback.
Exactly.
Where's my guaranteed buyback?
No.
Dude, stop thinking like a banker. Okay, think like an investor, like a partner. And they can't. And they have tick boxes. Their funds have got tick boxes. And they simply can't tick those boxes.
Yeah.
When I go to an entrepreneur who's a family office, typically maybe $100 million to their name, they run a business, a medium-sized business.
They're being in the business of trying new things.
They do real things in the real world. They create real jobs and they manufacture real parts and services. Within minutes.
It's not financial engineering.
Not financial engineering. Within minutes, I can convince that guy.
Yes.
I can convince that person this is something not only that they want to invest in, but they want to use to raise money for their business.
So not only are the businesses you're working with quite unique in how you apply them, but also it sounds like the investors that you work with, you're attracting the right people that you want to be with.
There is a huge universe of investors out there who are disillusioned with what they see in Islamic finance. And they don't want to invest in those things. They don't want to put their money with the Islamic banks. They come to me and they say, I just feel uncomfortable.
Yeah.
It looks like a bank.
Just like my friend, as he said this
Right.
Yeah.
Exactly. So then they see this thing and say, wait, why is nobody else doing this? How come you're the only people doing this? Because nobody else is thinking from first principles.
Does that raise skepticism though? That, wait, are you a bit of a snake oil salesperson?
A little bit, but I think if they look into my background and see what I've done, and I have been an establishment guy. Exactly. I've been with blue chip, bulge bracket. I've been a global desk head at 2 bulge bracket firms. And they said, look, this guy is actually the real thing. And the reason why I'm able to create the infrastructure and the financial documentation and the processes. My co-founder, for example, is a former chartered accountant who's worked in the industry for many years. And he's the guy that sits there doing fundamental due diligence on each of these businesses. He's the guy that sits there embedded in those businesses, working out exactly where every penny and every cent is going and creating those internal structures to ensure we have those capital controls and operational controls. When you combine the real world nous with the sort of establishment financial background, I think people are convinced that actually these are not snake oil sales.
Yeah,
they do know what they're doing.
Yeah, absolutely. So I want to pivot now to talking about the future of CCM. So where are you at right now in the CCM journey, and what lies ahead?
So we're still at a fairly early stage. I mean, we got regulatory approval last year. We've done 5 funds for it.
What is the regulatory approval that you got?
So we have an investment vehicle called a protected cell company in Jersey, which is the International Financial Center. It has a very strong reputation, and it benefits from many things like withholding tax and so on. And investors are very comfortable with it. So we set up our vehicle there with independent directors and a blue chip corporate service provider providing all the administrative services and independent directors and so on. And our program, notes issuance program, the vehicle that issues these PPNs, does so on a standardized basis, which is why the companies who raise money with us can afford to do so. Because if they went to Clifford Chance and Alan Overy and say, can you do us a bond? That'll be $1 million before they even get out the door, right? So we do it for a tiny fraction of that cost for these companies.
Well, you're able to amortize the fixed costs across all the deals.
Exactly. Yeah, that's right. So investors can then invest into that vehicle in a regulated vehicle in an international financial center. Yeah, they have some assurance with the legal and reputational robustness and the regulatory robustness and so on. And so that's what the vehicle does. We have another 5 or 6 clients lined up this year for 2025 across international education, business, healthcare, renewables.
Quite diversified then.
Quite diversified. We're looking for strong businesses in their sector that we can ally.
How do you find these businesses? Sorry, I didn't quite ask.
So my co-founder is, as I say, he's an individual who's worked in, he's a chartered accountant, and he's worked as in fact, he was the CFO who was introduced to me by Tariq Al-Diwani for my first deal.
Gotcha.
So the first company who was my first client was White Line Foods, and he was their CFO.
Yeah.
And so he, when we did this first fundraise for them, he said, hang on, we're really onto something here. Like, investors really like this, and the business really likes this.
And so we're meaning this, and we want this.
Right. So why don't we create a company that actually scales this up? So he and I got together and created CCM to do this.
Got you.
Yeah.
So to scale it up, I mean, you mentioned the next 5 deals for this year, and to obviously make your business sustainable and to kind of meet the growing demand for this. And you're still very early. There aren't any competitors from what I'm hearing. How do you scale and do that? Isn't there going to be some growth challenges for such a small team?
Yeah, we have been approached by outside investors, and obviously it's very nice to be approached, and we're happy to have conversations, but we've very deliberately held off on bringing external investment. So the business is self-funding. Yes, that does have restrictions on the speed with which we can grow, but we want to make sure the product is really, really high quality, and every deal is a slam dunk, inshallah, God willing, before we open it up for to become the, whatever you want to call it, the Goldman Sachs or the Deutsche Bank. And maybe there's a bad example. It is
You don't want to be labeled with that.
I mean, the blue chip go-to in the Islamic finance industry. That's what I see us in 5 years' time. And I want to see the name CCM as synonymous with being the standard bearer in the Islamic finance industry. So people don't think of the Islamic banks.
Yes,
regional and domestic.
I mean, that skepticism obviously remains. So how can people, whether they be entrepreneurs, potential investors, businesses, how do they get in touch with CCM, and how do they be a part of the CCM journey?
Yeah, we would love to be able to allow retail investors to invest in the PPN, but it's simply not possible because our regulatory permissions don't allow that.
So who can?
So professional investors, accredited, qualified investors, typically of a certain size and liquid net wealth. They can be institutional as well. So our investors are typically small institutions, family offices, professional high net worth investors, and endowments.
Gotcha.
And also feeder funds, which is a very essential part of our business. And one of the things that we're actively doing is looking for feeder funds in different parts of the world who are interested in this type of financing activity and bringing their investor base to us.
Yes.
So we don't face the retail investors, but they do.
Yes. I mean, obviously, Wholesum, from our capacity, we are working with you in that. Of course, we're still only for accredited investors. So you're solving the problem for businesses, but you're not yet for the mass market. Is that something that you think about down the line, or how else do you kind of benefit the wider public?
Yeah, we must allow the wider public access to this type of financing arrangement and investment product. But there are risks associated with it. And it's quite right that regulators around the world want to protect retail investors who perhaps aren't as savvy with the processes and the types of financial instruments that are involved here. There are risks associated with it. So it's important that they are protected. That's why, for the time being, we'd rather work with feeder funds who have those regulatory permissions. In the fullness of time, I think it would be fantastic if the PPN were a standard instrument throughout the industry, not just offered by CCM, but by any other provider out there, so that retail investors are allowed to put their pensions or their insurance products into a PPN investment. That's something we'd like to do in the future. It's something we can't do today, but it's definitely on the cards for the future.
Of course, it's balancing the execution quality with obviously the mission. You've got to try and get that. So I want to finish up, and you've been in finance for many years. You're working with investors. You've written a book. What's one wholesome money tip that you can share for our audience? Something that you think is timeless wisdom?
I think education is key. Don't get caught up in the fads of today. And I'm on the record as being an advocate of sound money through Bitcoin, but I am not an advocate of crypto, for example. And I fear that a lot of people in my community get caught up in this faddish investment trends, and they talk about crypto. And have you invested in this coin and that coin? And I 10x my money here and I 250x my money there. Don't get caught up in these things. There's no substitute for long-term, solid thinking. Educate yourself on finance generally. Understand Islamic finance and ethical finance from first principles, not what you see being offered to you by the banking industry. Because banks are by their nature money creators. And money creation is not ethical in and of itself. It cannot be. That's why I believe in Bitcoin as sound money. That's why I was a former gold bug, because I think a gold standard is something that was essential to a healthy, functioning cross-border global.
There's tangibility to it.
Correct.
And of course, as we've talked all along, is you're advocating for that real economy connection, obviously through PPN, but there's a disconnect. If all you're looking at is how do I 10x, and does that mean there's 10x of real value in the world or not?
Right.
Speculation.
It really worries me when, and for some Asian Muslims, particularly in the UK, I don't know about elsewhere, but we seem to be very susceptible as a community.
No, I heard these anecdotes of different in the masajid they have lectures and talks. I had some friends from the Tabligh Jamaat who say, the bayan is happening in the front, all the kids at the back are trading the latest cryptocurrencies. So it has definitely taken a community by storm. For good or for worse, as we see. But Harris, thank you for your time. It's been a fascinating conversation. You took us through your personal journey, through some very personal stories, and really shared insight about the PPN. So we wish you all the best with that. Of course, from a wholesome perspective, we're very grateful for our relationship. We hope to do more of that. But what I really wanted to get out is why this PPN model is so important, and how it can really benefit society and why we must get behind it. So thank you for your time.
Thanks for having me.
Love you.